Hello and welcome to my channel, where we help you make smart financial decisions. Today, we're going to talk about investing during a recession. With the economic downturn, many investors tend to panic and withdraw their investments, but did you know that a recession can be a great time to invest? In this video, we'll discuss 6 key points on how to invest in a recession. Before we start, please like the video and subscribe to the channel. 1. Invest in low-cost index funds. During a recession, the stock market tends to dip and experience volatility, making individual stock picks risky. Instead, consider investing in low-cost index funds. These funds track a broad market index, such as the S&P 500, and are designed to mimic the performance of that index. They offer a diversified portfolio of stocks and are typically low cost. When investing in index funds, it's important to choose a reputable fund with a low expense ratio. Vanguard and Fidelity are 2 popular options. Additionally, consider investing regularly, such as monthly, to take advantage of dollar cost averaging. This strategy involves investing the same amount of money regularly, regardless of market fluctuations. By doing so, you can buy more shares when prices are low and fewer shares when prices are high, which can help reduce your overall investment risk. 2. Look for undervalued opportunities. During a recession, many stocks become undervalued as investors panic and sell off their shares. While this may seem scary, it can also present opportunities for savvy investors. Look for companies that have strong fundamentals, such as a solid balance sheet and cash flow, but are currently undervalued. These companies may be able to weather the recession and come out stronger on the other side. However, it's important to do your due diligence and research before investing in individual stocks. Look at a company's financial statements, earnings reports, and industry trends to assess its potential for growth. Additionally, consider diversifying your portfolio by investing in multiple undervalued opportunities across different industries. 3. Consider defensive stocks. During a recession, consumer spending tends to decrease, which can impact the performance of certain industries, such as retail and travel. However, other industries, such as healthcare and utilities, tend to perform better during economic downturns. These are known as defensive stocks. Defensive stocks are companies that provide essential goods or services, which are always in demand, regardless of the economic environment. When investing in defensive stocks, it's important to look for companies with stable earnings, a strong balance sheet, and a history of paying dividends. Defensive stocks may not have the same growth potential as other stocks, but they can offer stability and consistency during uncertain times. 4. Keep a long-term perspective. Investing in a recession can be nerve-wracking, but it's important to keep a long-term perspective. Historically, the stock market has always recovered from recessions and gone on to reach new highs. By investing for the long term, you can ride out short-term market fluctuations and potentially benefit from the market's eventual recovery. When investing for the long term, it's important to stay disciplined and avoid making impulsive decisions based on short-term market movements. Instead, focus on your investment goals and stick to your investment plan. By doing so, you can increase your chances of achieving your long-term financial objectives. 5. Build an emergency fund. Investing in a recession can be risky, so it's important to have a solid financial foundation before you start investing. One way to do this is by building an emergency fund. An emergency fund is a savings account that you can tap into in case of unexpected expenses or job loss. During a recession, having an emergency fund can provide a safety net and help you avoid selling your investments at a loss. When building an emergency fund, aim to save 3 to 6 months' worth of living expenses. Keep the funds in a high-yield savings account or a money market account, which are low-risk investments that offer competitive interest rates. 6. Avoid making emotional decisions. During a recession, market volatility and negative news headlines can cause many investors to panic and make emotional decisions, such as selling their investments or buying into risky investments. However, it's important to avoid making emotional decisions when investing in a recession. Emotional decisions can lead to poor investment choices, such as selling low and buying high, and can ultimately hurt your investment returns. Instead, focus on your investment goals and stick to your investment plan. Remember that investing is a long-term strategy, and short-term market fluctuations are normal. Consider rebalancing your portfolio periodically to ensure that your investments align with your risk tolerance and investment objectives. By avoiding emotional decisions and sticking to your investment plan, you can increase your chances of achieving your long-term financial goals. Investing in a recession can be challenging, but it can also present opportunities for savvy investors. By investing in low-cost index funds, looking for undervalued opportunities, considering defensive stocks, keeping a long-term perspective, building an emergency fund, and avoiding making emotional decisions, you can make smart investment decisions that can help you grow your wealth over time. Remember, always do your research and invest based on your financial goals and risk tolerance. Thank you for watching. Remember to like the video and subscribe to the channel.